There we are. All right. Hello and welcome to this week's Profit Maximizer Moment. This is Wayne Bilal, your host and coach. I'm the founder of a local CPA firm that works with business owners to help them make more money and keep more of it in their bank. We do that through our profit coaching programs and our uh, tax planning system, which has saved my clients millions of dollars. Um, uh, this show, by the way, is dedicated. The whole purpose of this show is to help business owners make more money. So we're throwing out tips every week. And there's a lot of them, so check YouTube. A couple things I want to get into. First of all, last week I forgot. Last week we were talking about where to find cash if you need it quickly. I forgot to bring up you can also factor your receivables. All right, I'm not a fan of it, but if you're really hurting, that's not a bad way to go. Factoring receivables basically there's really two ways. One can be with recourse and without recourse. Well, without recourse, you're basically selling your receivables at a discount. All right. And if they don't pay, that's not your problem. With recourse, normal way I see it, they're borrowing against the invoice. And if they don't pay, you have to pay them back what they lent you, which you have to do anyways. Something to look into. I'm not going to get into it in very big detail. Another thing that came up is I saw somebody make a comment about, tax planning isn't really, you're not doing anything that can't be found on quick online. Technically correct. All right. I'll give them that much. Biggest problem is why does tax planning work? Well, tax planning works by sitting down with a client before the end of the year when you can still do some things. All right. And it starts to concentrate on ways to not just do this year's tax planning, but into the future, setting up retirement plans, who knows, whatever, buying equipment, whether you should hire the children, whether you'd have a separate company. There's so many of them. And the tax program we use looks at like 1,500, 1,700, I forget. And then we sit down and customize it for the customer. Now, why is that an advantage? Well, the biggest thing is most people think that um, when we do your tax return, we're thinking about all the ways for you to save money. It's not at all true when we're doing tax returns and most CPAs and tax preparers, when we're doing tax returns, we're in what I call compliance mode. Get the right numbers in the right places in a way that doesn't attract attention. All right, as much as possible. So when we sit down and do tax planning, we're actually changing our hats and putting on a planning hat. And the discussion isn't just about tax planning. It's okay. What is the goal? What is your purpose for being in this business? What's your why? Is this going to be a business that you're going to plan on selling in 10 years? Is it a business that you think will be multi-generational? Is it a business that's just a side hustle for you? It's just something for you to do to keep busy. Any of the answers we also get into a little bit about, well, okay, how should we run the business? All right. But I think saying tax planning is a waste of money. Um, I got clients that come back every year. If they thought it was a waste of money, they wouldn't because I don't charge cheap for it. Anyways, today we're going to talk about setting up credit lines when you don't need them. Look, every business owner knows that cash coming in doesn't always match cash coming out, going out. This is really true for a startup business, seasonal businesses, or businesses that are really fast growing. Also, construction companies will run into this. They got a contract, they got a large contract. They have to pay their employees, buy the materials, and it might take 60, 90 days to get paid. Hopefully not, but it's possible. And during this whole time, while you're not getting paid, you got to pay your employees. Rent needs to be paid. Vendors need to be paid. Sales taxes, property taxes. You know the drill. All right. What the line of credit is designed to do is for those times when you have a difference between your cash in your bank and future cash coming in, you run into a little bit of a swell. Now, problem is, don't go to the bank when you need it. You need to start earlier. You start talking to the banker about setting up a line of credit long before you need it. In fact, you should check with your banker before you even start your business to see what you can do. But for sure, if you've had a business for 2 years and you're showing a profit, even if you don't need it, get it. All right. I've had people say, oh, I get credit with my vendors and all that. And it's true. Yeah. And a lot of times you go talk to your vendors and extend terms. Also, something we probably didn't talk about last week. But having that line of credit in there is a good way to go. Another thing I work with my clients on, um, a little aside here, is figuring out how much tax you owe at the end of the year. People love to complain about, I got to pay this tax bill. Well, you know that, all right? It should be treated like any other expense, like cost of goods sold, salaries, telephone bill. It's a necessary expense of running a business, so it should be taken into account when you're doing your planning on price, what you're going to charge, everything else. I mean, it's part of your cost. So what works really well for controlling cash flow and not being surprised by a 10, 20, 30, 70, 80, 100,000 or more tax bill when your accountant calls is have them, or you calculate from total sales, what percentage did you need to pay tax? So a lot of times, for somebody selling a product, it's 3 to 5% is pretty common. Service industry might be 15 to 25%. Whatever the number is, what you do is you sit down once a week. I do it every 2 weeks when I do payroll, and look at what you collected in the last week or two, and take that and multiply it times that percent and move that to a tax account. Now, why am I bringing this up like this? First of all, it's good cash management. You might as well take that money and put it aside. But secondly, you can create your own line of credit. Basically, yes, that money's set aside for taxes. But if you have a temporary problem for a week or two or a month while you're waiting to get paid, you can borrow from your own tax account. I mean, it's just money you set aside in a savings account for you to pay your income tax at the end of the year. It's much easier to save, let's say $500 a week, than coming up with, $26,000 in a chunk. All right. But it's there. All right. So there's two different angles that you can do to create a line of credit. One is setting up your own, one is going with the bank. Now remember, if you're going to do a line of credit, first of all, I see so many businesses doing well, but are looking to expand it or take a big contract, but they don't do a budget. They don't do a cash flow budget. You need to do that. You should. I budget myself out at 12 months in advance just to see where the profit used to be almost necessary. It was more than once when I was growing my business where it's like, well, I got to find $40,000, $50,000 in business in the next 6 months, or the bills won't get paid. All right, we're not in that situation now, thank God. But what we need to do, you need to have that cash budget, and then remember, your credit has to be good, and the business has to have a history of profits in order to get an unsecured credit line. Banks are a lot more picky than you used to do. Contract funding, the SBA, a lot of local banks do contract funding if you're a contractor. Something to look into, because that really works out well. Allows you to buy materials and pay your employees during the times when you're doing work, but have not yet received payment. So any general contractor or somebody who has large contracts should get with their bank ahead of time. Every bank runs it a little different. Some advance you the money, and when the check comes back, it's a joint check. They cash, you sign it over, they cash it, pay back that loan that's related to that. You deposit the rest in your bank. Others give it to you, and you're supposed to pay them. They all work different. Once you do get a credit line, though, guard it like an asset, because what it is, use it and pay promptly. After a year of good use, and you're having another good year, hopefully, call and get the credit line increased. I would do it with one bank, but you might want to consider two banks. Look, the economic problems we've been through in the past, COVID, the 2008 collapse, shows you why it's important to have these things in place. You just don't know what the world's going to throw at you next. Hey, until next time, this is Wayne Blau saying, let's make this our most profitable year ever. Hey, God bless, and see you at church. Take care. Bye.